Score 92% plus on your life plus health insurance exam, best practice exams. Question 1. Which type of business insurance agreement helps partners buy out the interest of a deceased partner? Key person insurance, buy-sell agreement, executive bonus plan, split dollar plan. A buy-sell agreement uses life insurance to ensure surviving partners have the funds to buy out a deceased partner's share. Question 2. Are life insurance death benefits generally subject to federal income tax? Yes, they are always taxed. No, they are generally received tax-free by the beneficiary, only if paid out in a lump sum, only if the estate is the beneficiary. Lump sum death benefits from life insurance are generally not subject to federal income tax. Question 3. What happens if an insured takes a loan against their whole life policy and dies before paying it back? The policy is void. The beneficiary must pay the loan. The loan amount and interest are deducted from the death benefit. The insurer forgives the loan completely. Outstanding policy loans and interest are subtracted from the final death benefit payout. Question 4. Which retirement plan is designed for self-employed individuals and their employees? 401k, 403b, Keogh Plan, HR 10, Roth IRA. Keogh plans are qualified retirement plans designed specifically for self-employed individuals. Question 5. What is the primary purpose of key person life insurance? To provide a retirement benefit for the employee, to protect the business against the financial loss of a crucial employee, to provide health insurance to executives, to pay the employee's family directly. Key person insurance protects the company, which is the applicant, owner, premium payer, and beneficiary. Question 6. Which annuity payout option guarantees income for the longest period? Life with 10 years certain, straight life, joint and survivor, fixed period. A straight life, pure life, annuity provides income for the entire life of the annuitant, regardless of how long they live, but stops upon death. Question 7. What does a guaranteed insurability rider allow the insured to do? Purchase additional coverage at future dates without proof of insurability. Waive premiums if disabled. Receive a refund of premiums at age 65. Change from term to whole life. This rider allows the insured to buy more coverage at specific ages or life events without a medical exam. Question 8. Under a group life insurance policy, what does the employee receive? A master contract, a certificate of insurance, a separate individual policy. Nothing. The employer holds the master contract, while covered employees receive certificates of insurance. Question 9. Which feature allows a term policy to be changed to a permanent policy without proving insurability? Renewability, convertibility, assignability, incontestability. The conversion privilege allows term insurance to be converted to whole life without a medical exam. Question 10. In health insurance, what is a pre-existing condition? An illness that occurs after the policy is issued. A condition for which medical advice or treatment was recommended or received prior to the effective date. A genetic trait. An illness caught from a family member. Pre-existing conditions are health issues that existed before the policy's start date. Question 11. What is the maximum penalty for a premature withdrawal from a traditional IRA before age 59.5? 10% penalty tax plus ordinary income tax. 50% penalty tax. Forfeiture of all funds. No penalty. Early withdrawals from a traditional IRA usually incur a 10% IRS penalty in addition to being taxed as ordinary income. Question 12. Which of the following is considered a non-forfeiture option in a whole life policy? Reduced paid up, waiver of premium, guaranteed insurability, automatic premium loan. Non-forfeiture options: cash surrender, reduced paid up, extended term, protect the cash value if premiums stop. Question 13. What is the purpose of the time limit on certain defenses provision in health insurance? To limit the time a policy is active. It acts similarly to an incontestability clause, usually preventing the insurer from denying claims for misstatements after 2 years. To set a time limit for paying claims. To restrict the grace period. This provision protects the insured by limiting the insurer's right to void the policy for misstatements after 2 years. Question 14. What is a capital sum in an accidental death and dismemberment (AD&D) policy? The death benefit, the payout for the loss of a limb or sight, the premium amount, the deductible. The capital sum is the percentage of the principal sum paid out for dismemberment, while the principal sum pays for death. Question 15. Under COBRA, how long can an employee typically continue their group health coverage after a qualifying event like termination? 12 months, 18 months, 29 months, 36 months. COBRA generally allows a terminated employee to continue coverage for up to 18 months at their own expense. Question 16. What defines a totally disabled person under any occupation definition? Inability to perform the duties of their regular job. Inability to perform the duties of any occupation for which they are reasonably suited by education, training, or experience. Loss of one limb. Being hospitalized for 3 days. Then the occupation definition is stricter, requiring the insured to be unable to work in any suitable job. Question 17. What type of policy combines life insurance with an investment component heavily tied to the stock market? Whole life, variable life, universal life, term life. Variable life policies have a separate account invested in securities, meaning the cash value fluctuates with market performance. Question 18. Who assumes the investment risk in a fixed annuity? The annuitant, the beneficiary, the insurance company, the state. In a fixed annuity, the insurer guarantees the principal and a minimum interest rate, bearing the investment risk. Question 19. Which dividend option allows the policy owner to purchase additional amounts of whole life insurance? Cash, reduction of premium, paid up additions, accumulate at interest. The paid up additions option uses dividends to buy small, fully paid up amounts of the same type of insurance. Question 20. How are benefits received from an individual disability income policy generally taxed? Fully taxable as ordinary income, tax-free, taxable only if they exceed $10,000, subject to capital gains tax. If the individual pays the premiums with after-tax dollars, the disability benefits are received tax-free.